Mess with fire, now it's closing in. higher, take my hand, I'll take you higher than you've ever been.
All right, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So on this linear regression trend to the downside, retrace, whatever you want to call it, we are currently holding the 382 of this little pitch fan doodaddy that we've had up since the 16th of January, and looks like we are finding a daily candle close of an indecision spinning top. Does this mean we are going to wick down into this Hail Mary 1618 and come to the bottom of this channel, or start heading our way back up? Let's go find out inside the liquidity, shall we? Here is High Block Capital. What is this heat map, you say? Well, it's when people lock their liquidity in the charts to get burnt to a crisp for not using a stop loss, and we get to see where those crispy characters lie in wait. So as we put out for you yesterday, we mentioned this $77 million pool of 100x, and they did come back to that after the live. And then we suggested that the idea of coming up into this region to collect some of these characters up here, particularly the 100x characters, which they love to come back to. Up in this region, you have 138 million at 2617, which we have yet to reclaim. They went up to this region and decided to retrace into some of the 100x. And now they're retracing and bouncing off of the divergence they spawned off the carcasses of the 50x characters down here.
Fatality.
Yes, and they like to repossess the money of those who don't pay themselves or set their stops into profit, and that's what we watch as the divergence forms. So they come back to the 100x, they spawn divergence off them, and then go and get the 100x on the other side, and then spawn divergence off them, and then go get the 100x on the other side, and then spawn divergence off of them, and go get 100x on the other side, and rinse and repeat. So it looks like we have $7.5 billion short imbalance with a lot of stacked liquidity to the upside here at 2696 region is where it starts to get thickest of all these pools of shorts waiting to get paid and not paying themselves, so they might get devoured as we see False Move Monday come underway. So does False Move Monday shoot us up only to come back down and retrace thereafter? Let's go into the higher time frame liquidity pools of the external liquidity to find out as we expand our vision. Shout out to everyone here. What's up? Spragados, APV, Dingo, and more. All right, so the 12-hour time frame doesn't really interest me so much, so I always skip that. Oh, by the way, High Block Capital does cost a pretty penny, so if you don't mind hitting that like button and consider subscribing so you can get this update for free every day. Free is a nice price tag for that liquidity update. So on the 7-day time frame, we do have the imbalance slightly to the upside in the regions we just mentioned at the 26.9 region and a little bit higher at 27.5, although these pools are quite minuscule in comparison to the monthly and 3-month and 6-month, so we need to expand our vision to the higher time frame. So on the higher time frame, you do have larger pools down here at 24.5 and below starting to get thicker. Will we see what everyone is calling for, a capitulation wick down to some of these regions before the FUD really starts to get thick? We do have these Robinhood delistings and Binance being charged and trying to repossess money from the US customers and all this fun stuff. Does this mean that we will have a capitulation wick into these pools? So in the higher time frame of the 3-month and the 6-month, you do have a large path paved to the downside to 22.5 and below, although you are getting large pools starting to form in the 34 up to the 34k region, starting to compete with this pool below. As it stands previously, our stab to the downside here to 25.2 did just barely close out the 65 million in long liquidity here. So was that enough divergence to take us to the upside to at least come into some of these pools and start to clear some of the shorts for a False Move Monday rise? That is the question. If we go to the 6-month time frame, you also have this downwards path paved up quite nicely with $109 billion down at 22.5 now. It's been at 109 for some time now, since the end of May, so it hasn't really changed this pool so much, but that is a large amount of money as we start to retrace down into here. You also have $100 billion down at 24.3. That could be an interesting target as well. Starting to get thicker on the upside, you have 32.1 with 90 billion, and they're double-digit characters all the way up to the 34k region, and all the way down to 28.2 you have $36 billion. If we just zoom into the minutia here and see what exists immediately above it and below us, you have 12 billion at 26.7, 10 billion at 27 even, 14 billion 27.3. You got 3 billion, 4 billion, and you're 67 down at 24.9. So on this lower path, you do have more than you do on the upper path, but to come up to these regions, maybe fade up at 27.5 and start to make their way back down. They go up so they can go down because they avoid having to pay the shorts, and they go down to go up to avoid paying the longs. It's this kind of reverse psychology trick that is played. So you have to think about what move is the false move, and today is Monday as we start the new week. So we now go to the 2-year time frame because the yearly time frame lost this June range here. The cool thing that we can now do, though, which is interesting, is we can compare the pools and how much of it is in that range. Since this range is gone on the yearly time frame, we can look at 32.4, for example, and see that there's $130 billion up here at 32.4. And if we go to the 2-year time frame and compare that same 32.4, it will be thicker, 159. So there's $30 billion still in that, from that range before over here. So it's kind of interesting because we can juxtapose what the pools from in the past to the pools over in this region add up to. So as it stands on the 2-year time frame, if you just look at the 2-year time frame for what it's worth, you do have larger paths starting to form. The largest liquidity pool right now is at 32.4 at $159 billion. And that is the thickest one we have, although you do have a partner in crime which is close in value at 24.4 for $148 billion. So do we see some divergence spawned off in these regions? If you start to take out some of these pools, how far down does a quote-unquote capitulation wick go down to before they're satisfied to come up into this region? The last time we saw this much FUD was down here. We saw this back in March, where the Silicon Valley Bank failed and all this FUD was in the air, similar to now, and then suddenly we shot up and grabbed this $178 billion at 25.6 without hesitation. And there was hesitation on the longs as they entered, though, which allowed them to say, "Don't mind me," as they gapped up to grab it. So does the same thing start to occur as we go into these pools and they abuse the FUD in the air to cause a rise? Just something to think about as things go forward in time. On the 2-year time frame, you do have all these large pools up above that lest we forget all of these billions of dollars that are still shorting from back here. So you have large amounts of pools still shorting over the 2-year time frame, which are also like marionette strings, slowly beckoning for them to come up to them. You do have, of course, the $200 billion down at 15.2, which I thought was very strange that they didn't come down for that 100 billion down at 15.2 in November. They just let it build. I'm guessing those are the exchange positions where they all agree to let their positions build and percolate without touching them. So those type of places do exist in the charts where you have this large amount of liquidity just chilling there, and you got the padding of the retail or the other whales keeping their positions juicy and warm. So just something to note. The upside path is also starting to get thicker. So as we retrace into these pools, there will be a point where divergence is spawned, and then we possibly come up to grab the other pools. It's happened before and it will happen again. So it's worth taking note as we go back to the monthly time frame and go into our fib levels. Let's take a look. All right, let's see how everyone's doing. What's up? All right, so just noticing that this is kind of rounding out in a certain manner. I just put this here. I don't know how realistic this will be. It's just putting it out there. We did previously clear this zone, so we're going to leave that there for now. But what is this yellow line here? Well, you have a resistance, 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 and this, you bounced off it here. And yeah, if you could basically find this as support, then you could basically change the narrative. This is your typical like breakout, retest the neckline area, shoulder, head, and possible shoulder out of here. So let's go into the Binance chart and see what's up. All right, so on the bearish trend-based fib extension level, let's zoom in a little bit. So we had the external liquidity bearish trend-based fib level here. We had a impulse and then the retrace. That's how you get your bearish trend-based fib levels. You use impulse retrace ideas, and the math coincides with the impulse retrace of that idea. So here we had the impulse and the retrace back up, and all this math is contained within. And we talked about 236 for your entry, and after we failed that 236, down we went. And of course we saw some consolidation within the 0.65786 region for 3 days, and we even had some indecision doji moment before the 706 trapdoor was dropped, and we fell down into the golden pocket region of the 11382. This is where we currently reside. To consider going beneath the 1382 to the Hail Mary 168 region, and we have also a range from our first low and first high of this range, a 618 bounce at 23,934 on the radar as well. If we do have a capitulation wick down into these regions, you could be looking for some divergence to be spawned at 23,934 as well. If we go to the external time frame here, let's go to the 3 month actually. 6 month might be a better one actually. Let's go to the 6 month. 23.9. So that puts you just above that $102 billion pool at 24.3. So it starts to taper at that point. So that makes sense that divergence could be spawned off the liquidation of $102 billion at 24.3. You could see that as well. So that's something to look at if and when. All these if-then statements, of course, nothing is financial advice. So if you go to the other internal pool, we'll get there in a second. So we had this narrative of constantly bouncing and range trading for about a month, basically, between this range. 20-something days in the 651 region, we consolidated, we came back up, and we came down into the 1382 region where we currently stand. So we go into this in a little bit more detail. And on the hourly time frame, we had another potential short opportunity present itself here. We said this a few days ago, I believe, and we had the impulse retrace idea of the bearish trend based fib, and we said if you get rejected at this 236, this is your short image for this. We had a bullish image hold as well. We said if we can stay above the 236 that was down here, which we did not, and so this 236 had you at hello with the 6 time frames oversold on the oscillators, and that was your short opportunity down into this little mini 1382 region, which we've been seeing the consolidation play out as well. So the reason why these candles close in these regions is this math of the Fibonacci is not to be ignored, and this is why I use this for my ideas. And the 236 entry model into the golden pocket of the 11382 is a generally interesting model to behold. And also, if you get that bounce at the 6.5, then consider reassessing in profit and then looking for a re-entry. And that's where the trapdoor gets opened at the 706, and sure enough, boom, trapdoor opens down to the 1382. And that's where we stand. So let's go back into the moment of now and start to throw on our oscillators and see what's up. So here we go. Oscillators on, heads up display on. So all of these things should be toggled at different times. You don't need them on at every moment in time. This is the link in the description, momentummaster.info. Scroll down to features. You could toggle all of these things as you like, and then read about each component as we go over it if you're undecided. Also, if you're using Momentum Master, some of the things like the consider money flow and consider suppression are kind of new after release. I'm still kind of testing those out, so you can turn those off. You don't need all components on at all times. It's meant to be a heads-up display for certain features. So the thing before the group, yesterday we were pointing out the fact that this cloud needs to come down and curve. We said you initially get it rejected off the cloud when it's thick. It always tends to do this, and then you get that rejection, it starts to curve, and then it starts to thin, and then boom, you ride that thinning cloud up with the baseline crossover event, And we had you at hello yesterday. We talked about these pools up here. We did have yet to see them, but also one other habit of this with the Momentum Master Suite is when you break through the cloud, you come back and you retest the cloud, and then you continue on higher. So this retest of is this cloud valid or not tells you that idea. And if you go into the what is it? Let's go into here. Let's see if this is valid from this point. Yeah, sure enough, that's the 618 bounce off of that level too. So you get the golden pocket bounce from this impulse to the upside and the retrace down into that golden pocket continuation up to this region perhaps. I think it's in the cards based off of what's going on in the liquidity as well. It coincides with this quite nicely. This is one of those times where it looks like it's an easy potential long setup up into these regions. We already put these pools out for you up in the 26,965 region and the 26,443 region. Coming up to here is a frugal idea, and then beyond up into the 27K region. Also not absurd to think about. So up 27K will put you up here, 26.4 will put you up here. You tell me, what does it look like to you? So it looks like we could continue higher in my mindset based off this curve. This is why we look at these curves of the clouds. You can kind of preempt these kind of reversals before they happen. And so that's why this is a leading momentum type indicator. You get these kind of curvatures of the cloud and the thinning, and it preempts the move. This is basically Bitcoin's bottom. I traced over the price action back in November, and it took me about 30 hours plus to trace all the components, and before I knew it was the absolute bottom of Bitcoin. I didn't know that at the time, of course. And yeah, this is what the schematic is. What you want to look at as a template. It occurs over and over and over again. This thing is the same as this thing. It's the exact same thing over and over again. So you see this drop down, and then it makes the shoulder, head and shoulder out, if it's valid, of course. But you're more likely to get that juicy play on the 6 time frames oversold, and then you ride that up. And so this is the stochastic array. Sometimes trusting the stochastic array is a good thing. Sometimes it's better to trust other things. So here your stochastic array had you at 7 time frames oversold. I was going over this with the Momentum Master member, that your super trend of the bearish trend did not break as well, and so this was your absolute perfect entry for that short, the safest entry rather, and you were holding that 236 level of the bearish trend based fib extension for the bearish trend based fib. You had a second hit there, of course, like another attempt, and you dropped back down. So the stochastic array also alerts your phone quite nicely with that. So it's up to you and your levels and whether it meets the criteria or not. You don't need a guru, you don't need me. I'm just here to show you what may be possibly prominent at the time. All right, so let's go into the 4 hours time frame. We were talking about, actually, where's that? It was the 6 hour. So the 6 hour had this cloud kind of curving in a manner. I didn't like how it was thinning and thickening. It wasn't giving me a clear picture of what it's doing, but we were looking at this angle of at least kind of curving. It did come down a little bit more. Not really liking the looks of it so far. It's not really giving me much information that is coherent. Too much thinning and thickening for my liking, so I'm going to delete this actually. Not really liking the 6 hour cloud in terms of preemption of moves. If you look at the 12 hour though, the 12 hour does have a kind of curvature in this manner. So is this kind of trying to give you some sort of intuition about the potential reversal here? And then this is also, I believe, the daily cloud. The daily cloud did come down a little bit more after that. but attempting to wane, but still mighty thick on the daily. All right, so let's make our descent through the time frames. One thing that we did note was the 3-day and the weekly closing at the same time. So let's take a look at how the weekly candle closed. We're going to go to a fresh chart without all the fib stuff on it, just to take a look at it in its glory with the indicators on. So in order to break the bullish trend that we've been on, you have this super trend telling you you'd need to come down to the cloud. You'd need to have a 16% drop down to 21.5 in order to break this trend that we've been on, this macro trend to the upside on the weekly time frame. One thing that we did have about the beginning of May was the bearish cross of the baselines that we did talk about as we reached into these resistance levels of the trend-based fib, trend-based moving average, and the 200 weighted moving average. So we were meeting on the resistance of here, which caused the cross down event, and we've been seeing this steady rejection off the baselines as if it's suppressing it like water flowing down a river. So until we can start to flip this baseline event, you can expect this to come down some more on the weekly time frame. We're getting the Williams to have this alarming cross as of May 22nd, which is showing you that could have potentially fallen down more, which we did. And so are we going to reset some of this Williams as well, even though the weekly stochastic is down to the number value of 9? We are getting the money flow to come up above the RSIs, expressing a little bit of fatigue, which it likes to do. If it gets up above the RSI, it comes back down to it. It does have some wiggle room to keep going and expressing that fatigue before some divergence sets in and it comes back down. But something to note on the weekly time frame, you are getting the money flow to come back up above the RSI in a fatiguing manner. If you go to the 3-day time frame, the 3-day time frame is starting to show the money flow back in here and a potential curvature on the stochastic RSI. We dipped down into the Williams oversold region. So the 3-day was the thing that I was liking the most, and we closed this nicely on the 200 weighted moving average here. One thing that is not so great about this is that we are beneath the cloud and we had this potential bearish retest on the cloud, so we could be falling beneath that as the weekly suppression on the 3-day could kick in. If you have this Williams reset in this manner, though, it is getting into that region where it could start to have a rising sun out of here. The curvature of the cloud here is kind of suggesting that even if you were to come above this, that eventually you would fade down unless this starts to open up some more. The angle at which it's at right now is expressing slight fatigue, as it does on other time frames before it reverses. Similar to here, it's curving in a manner before it goes up. Is this curving in a manner before it goes down? The 200 weighted is holding nicely. You're also holding the super trend, which has been valid since January 10th. We even wicked off it here on March 8th. So the super trend back-tested level is back-tested to that number for a reason, because it's valid on all time frames, ironically enough. So if you come down to here, this is also holding thus far. We have 3% move to the downside to 25.2. If we start closing candles beneath 25.2, it's basically the trend is over on this 3-day time frame. If we go to the daily time frame, you can start to see the cloud shift that occurred before the move we had this shoulder, head and shoulder we were putting out for you back here when we had this bearish trend-based fib level up, and we were talking about that 236 model entry with the curvature of the cloud expressing fatigue, and you weren't seeing this thickness anymore, you were seeing the curvature. So the cloud is undeniably something that tells you when volume is entering and leaving. This is a volume weighted cloud formula, expanding and thinning according to the amount of volume present in the asset. And it uses a Heiking Ashi formula, so it's kind of something that you can note. And then it becomes this dynamic support and resistance level where if you can't get above it, you just start to see rejection. So until we can get above that 27K region and hold daily candles above it, it's just going to be another bearish retest to the downside. One thing on the 200 weighted moving average, we had this daily kiss and bounce up to it. And are we getting this daily kiss? We've seen it once and twice. Are we starting to see this to come up? This time was just a single bounce out of here. We're getting two. Is this expressing no interest and get this to fail? This is just one thing before it starts to fade down into this on the daily time frame. The daily time frame cloud is showing a certain sign of this. We talked about this kind of slightly curving in a manner as it's starting to make an interest to curve back up. You need to see this purple thin out a bit, similar to here. The blue is thinning, suggesting that the buyers were fatiguing. So you need to see the sellers fatigue and this to thin for this reversal potential to be in. Okay, so if we go to, let's look at the oscillators. Oscillators also in an ambiguous point at 29, I believe it says it here, 29, and the Williams not at that exact oversold level just yet, still ambiguous on the daily time frame for on oscillator B. If we look at the 22 hour also looking to curve up here as of this moment in time, starting to see some sign of life. However, it's been a lot of chop on the 22 hour. I haven't been able to glean much except for when we got to this point here when we had the double bottom on the Williams with the oversold thing. This is the ideal entry with the money flow beneath the RSI here, which did pan out ever so slightly. So is this going to be a push up here on the 22? It's kind of ambiguous to me. Let's look to the 12 for some information. The one thing to note on the 22 and the 12 is the baselines coming beneath the price. We did talk about that, so I will go over that right now. Is when you get, like, when the baselines are above the price, like here, you could have taken an entry, but ideally you want to see this baseline holding beneath the price action. And when this holds beneath the price action similar to here and you get the cross up event, then you're more privy to a move of this nature. So waiting until the baseline scoop it up like an ice cream scooper, that's the best way to go about it with using Momentum Master. So it's happening with the 12 and the 22, so that's something to note. So this could be the reason why we're getting the curve here, ignoring oscillator B entirely. If we go to the 6 hour time frame, we're starting to see that cross already occur. We had an indecision doji on the 6 hour time frame, which locked it in. So this is locked in as a cross up on the 6 hours. So the 6 hour is the first to cross up and negate this bearish cross down. Is that going to bring us out of here ever so slightly to those pools we talked about earlier up in the 27K region? I don't know, you tell me. If we go to the 6 hour time frame, this is starting to go up as we speak. It's still at a ambiguous point within the 50 region, not necessarily oversold or overbought. If we go to the 4 hour time frame, we're getting overbought here on the stochastic RSI without having gone anywhere really. This is kind of a bearish signal when you see this happen, where we have this struggle to get overbought and not go anywhere. That's suggesting no buyers stepping up to the plate. So it could be another leg to the downside on the 4. One thing to note is if you are in a trade that the last leg to get overbought could see some juiciness to send you higher, like here you're overbought and we went sideways on that overbought nature, the cloud thinned and you saw the greater leg of that journey to the upside after that region in the 88 level at the overbought status took you up 6%. So just because you get up into this region does not mean it's the end of the world, but it is something to note. Here we also had the Williams higher, so we still have room for the Williams to potentially push it higher with that 6-hour cross up as well. So you're also getting the 4-hour cross on the baselines. So this is locked and loaded, ready to go. Baselines beneath the price. Like in what I'm seeing here for the baselines, you need to go up 2% to kick this trend of the bearish trend base fib that takes you to the 2653 region as we head lower. This is where we stopped last time when we talked about the kiss to the cloud. You come back, you break through the cloud as it thins, and you come back, kiss it for that idea of retest potential. Also happened to be that 618 we went over, and so now you're holding this trend as we head higher. Getting a baseline cross event potential could be negated here if this goes up. We've seen it negate in the past. So if you hold this on the hourly time frame, the baseline, the MACD has yet to cross. If you were setting an alert on the hourly time frame, you would be flirting with the idea of it switching to a dump pump potential as it crosses down or crosses up here on the hourly time frame. If we go to the 15-minute, we are in the Asian range. You're getting a blue candle on the PVSRA strategy idea. PVSRA blue candle implies a stop hunt a volume. It's noteworthy, but not noteworthy in the green sense of 200% of the previous 10 candles. It's only a stopping volume candle of, I believe it's 75%, if I'm not mistaken. Someone could correct me on that. So we are getting this curvature to the other side of the trade, the downside, and potentially speaking, and this could be your bearish retest of like a ABC continuing lower. You are getting the cross up potential of the 15-minute. Can the 15-minute break through to the other side and negate this B leg? Can it make it into a C leg for this side? It's all if-then statements, so people, if you're into the whole ABC stuff, this could be a ABC too. It's all theoretical about if-thens about stuff. So if you are going to use this as a trend-based fib extension level, you can also use this for a small little scalperoo, and you need to maintain the 236 of this 25879 region, which we have thus far, but you need to break through the resistance levels of the 786 to go into this golden pocket region. The golden pocket region also coincides nicely, that 26483, with the other projected zone that we had out over here on the Binance chart. The 483, 443 is here. So are we going to see that to the upside? Once again, it is False Move Monday, so there's going to be a lot of wick-whacking of both sides. Do they go up in order to go down? That is the question here. How far up is up? For the time being, I'm seeing that this potential fatigue level of the 15-minute needs to see some sort of surge here, or it's going to fade on us. We are at Asian session. Asia doesn't generally tend to bring the pumps so much. You normally see that in London or New York. There are times Asia does bring the pump. You can backtest this using a indicator here called ICT Kill Zones by Tradinator. This will show you all of the different ranges and what they do within them. It's good to keep yourself abreast to the different time frames and when different things occur. A lot of times the London close is when they bring the fire from the New York Baton Pass from London to New York. Okay, well, let's do a little bit of a break here for a moment, see what the chat's doing, and then we'll go into the total. Yo, 5 concurrent viewers, what's up everyone? So if you have a question or something you'd like me to look at, now's the time to do that. we'll go ahead and look at total market cap. So the total market cap had about $50 billion that left instantaneously with the FUD idea. We had that bearish, similar to Bitcoin, the bearish trend-based fib level. We've hit the 1382 of that pretty much. Are we starting to build a narrative to go out of here? I think the altcoins had it worse than with all of the delistings and stuff. They have had it worse and have gone down into the 2 region of their retrace, where Bitcoin has held the 1382 region. So there's a slight difference in the level of bearishness over the total and total 3. You can see here, total 3 went all the way to the 2 level. It just got slammed, whereas total has maintained slightly better on their fib level retracements. Okay, so one thing I was toying with BNB was, what is Binance thinking of doing, right? So they have BNB bought with BTC, right, on their books. They have a lot of players buying BTC with BNB, or sorry, buying BNB with their BTC, and then they sold the BNB. So you've seen straight selling the BNB, get rid of the BNB, and it's going back into BTC, and the value of the BNB is dropping. So that was kind of interesting, because we didn't see the same with BTC USDT. We saw this buying back into BTC with USDT. So are they exchanging are they rearranging their assets internally to Bitcoin, is what I'm looking at here. And you're getting the dominance rise of Bitcoin dominance. So dominance is taking over right now. So you're getting this dominance. The altcoins are getting their weak play here. So let's just do this fresh. Okay, so yeah, you're seeing a Bitcoin dominance rise as the altcoins suffer in the delistings and the SEC attacks onto crypto. So this could bring people to consolidate their funds back into BTC. So the dominance of BTC rising is because it's one of those things that's just not owned by a corporation, so it cannot be SEC affected, really. So that could be one reason that we see a level maintaining and a possible rally for that to occur. The USDT dominance also getting a rise here because of people getting kicked out or stabilizing themselves into USDT. Do they find a reason to put their USDT into something as we approach this range on the USDT dominance? If they do that, this would drop back down into the regions here at the bottom of the channel. If there was a capitulation wick, this would rise up more as people get knocked back into USDT too. This would lower if this lowers, that means they're putting their USDT into trade, so the USDT dominance drops as they enter a trade. And then if this continues higher as the USDT dominance rises, that means they're buying Bitcoin with that. So if this goes up further while this goes down, this means they're buying BTC with the USDT. As it stands currently, the dominance is dropping as the Bitcoin if they're both going up, like if this goes up further and this goes up together, this means that you're getting basically people knocked out of Bitcoin into USDT. If the converse is true, where this is going down, this means people are buying BTC with their USDT. So the interesting thing is we're seeing this rise in the dominance of both of these. So people are getting knocked out into USDT, but also out of their BTC pairs, which we just showed with the BNB BTC. So are people going to reassess and buy into Bitcoin, or are we going to see this surge continue on Bitcoin dominance? So the dominant, even though we're going sideways within this range, the dominance is rising largely in part because of the FUD, I think, and people going into what they know to be stable. And BNB is not stable at the moment, so they're going possibly back into Bitcoin. So this could be a cushion that's being created to an upside play if people see that as stability and they leave the altcoin world into the Bitcoin world. Just a little idea percolating on the back burner here for myself, not 100% on it, but just trying to speculate on how the exchange would survive the attack and what they would attempt to do to survive it. All right, let's see what you guys want. Hey, what's up? What's up, Colin? Okay, so we're going to see what's going to occur on False Move Monday. I suggest that this cloud play, unless this needs to get negated here in the next 39 minutes or so. We're not going to stay on to see that, but basically if this continues higher and negates this cross down event, then you could see yourself coming up to this pool quite easily. The cloud shift is on the hourly time frame is suggesting it, even though the stochastic is acting ambiguous in this way. It doesn't matter as long as you keep going in this path. The 15-minute is also acting ambiguous on the cloud. It did break the trend it was attempting to create. However, it did bounce off the 618 golden pocket region on that hourly time frame, and you are getting the cross up event saying that the 15-minute dump is potentially over. The 15-minute is getting overbought, so we need to see a leg up, as I said, on the next 39 minutes of this hourly candle close to make it official or not. If we go back to recap the liquidity, let's see what has been pinged in the last 5 minutes or so. Getting little pools here and there on both sides. Currently you have a $56 million pool of 50x shorts up at 2616. They previously came and took out all the 100x, so all the 100x of these shorts are gone. As you see here, they wicked off that $40 million like, thank you. So are they going to continue higher up into the 59 million pool of the 50x up here? There's slightly more in shorts than longs that were pinged in. They got out all the 100x of longs, so they could continue into this region of this 138 million at the 100x 2617 and above. That's my story and I'm sticking to it. These pools look juicier to the upside here, and the cloud confirmation on the hourly suggests it as well. So I'm going with this until it doesn't do that. But be careful, folks. It is False Move Monday. Just be aware of trades. I really like how this held true to the indicator. So we'll just keep you posted. And once again, thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part and for coming on in, and we'll do the same, bringing the fire, the accuracy, the precision, and all that fun stuff with the liquidity. So we'll catch you on the flip side. Peace.